In this video, I'm going to analyze Netflix and make a decision whether I should buy more shares, hold my shares, or sell my shares in the number one streaming company in the world. Netflix has a storied history. They came out of the DVD industry. They used to rent out DVDs, mail them to you, and you'd return them in the mail. But they knew that the future was all about streaming, and they really bet the company on building a streaming business. And boy, did it pay off. They are the number one streaming company. They're well ahead of all competitors, clearly ahead of everyone. They have the best service itself. The software functions the best. They have a great library of videos, and they have the biggest user base that is a paid user base. It's global. Here in the US, geez, I can't think of a household that doesn't have Netflix. But as you go around the world, Netflix is really growing around the world. This is a profitable company that can really turn on and turn off free cash flows as needed. They build their own content. They develop new movies. They develop new shows. Some of the best new shows are coming out on Netflix. They're even going into sports. Drive to Survive really put F1 at the forefront of the viewers' experience here in the US. It's just been a huge hit. And I think they want to continue to grow in sports. Overall, Netflix is clearly the leader. And is this company well priced currently at their stock price? Is it priced at a premium or at a discount? I want to find out. I'm going to do my own analysis and get to that decision. I'm going to go through the fundamentals of the company, show that to you. Then I'm going to go through my process of making a decision whether I'm going to buy more shares, hold, or sell my shares in Netflix. The Netflix stock is up 32.94% year to date. It's a really nice return for 2024. In 1 year, the stock is up 87%, a really nice return. If you look at the 5-year chart, you can see where the stock was really discounted in the 2023 timeframe, and it really rose 255%. And there's a correction on that. It was in the 2022 timeframe that it rose 255% if you go from the low point up to where the stock is trading today. It still hasn't reached the peak that it got to. It's down from that peak about 9.7%. But you could see where you could have picked up Netflix at a really good price not too long ago. The fundamentals of Netflix. The market cap for the company is $269.5 billion. Pretty big market cap. This is a mega cap stock. The revenue for the company is $33.7 billion. So you're paying about 9 times revenue, which is really good for the number one streaming company that is growing. They have solid net income at $5.4 billion, and they have a forward earnings per share of 35.4, which is reasonable for a growing company. They have lots of analysts covering the stock, and they have a buy rating on the stock, and they have a price target of $578, which is below the current stock price of the company. The company has been growing the revenue really well. In 23, they grew 6.67% on a very big number. In 22, about the same amount. In 18% growth. So the company is a growth company. They're growing globally, and they can also increase their prices, which would really drive top line growth for the company. The company's really grown their cash flows. Their cash from operations went from being negative to being very positive. You could see that in 19, they were cash negative on operating cash flow. But since then, they've been positive on operating cash flow. And this past year, they had really good free cash flow because they had a lot of cash from operations and very little CapEx. So that just really looks good that the company is really profitable and beginning to generate really cash flow, similar to Alphabet, Meta, and all the other technology-based companies that make a lot of money and return a lot of cash back to shareholders. Analysts cover Netflix, and their price targets are a little dated. This company, the stock price has been moving up so fast that it's moved beyond most price targets. The average price target is $578, and stock price is trading at $622. The high target is $765 per share. But you can see that analysts put these price targets maybe 3 to 6 months ago, and that the stock has been moving up so fast that it's really gone past those targets. The balance sheet looks really good for Netflix. They have a lot of cash on the balance sheet, and they have a reasonable amount of debt. Their debt to EBITDA is 0.68, and I require that it be below 3. So it's well below my benchmark. So it's doing really well with regard to its balance sheet. Earnings per share look great. The company's really growing earnings per share. The company is expected to do $17.52 per share in 2024. But as you go into the future, you can see that it's really going to grow 23%, 19% in the next couple of years. So this is just going to continue to drive that stock price higher because the earnings per share is really moving up for Netflix. I calculated the value for Netflix using their free cash flows and also using their earnings per share. And I came up with the fact that this company is currently selling its stock at 8% premium. meaning that I believe that the stock is really worth $601, but the stock price is being sold at $622. Again, this is a really well operated company, number one in its category. A lot of investors like it, which is why the stock price is really high. So should I buy more shares in Netflix, just hold my shares, or sell my shares in Netflix? Well, let me go through my scorecard and make that decision. First, do I really like the company? Do I like the industry they're in? Absolutely. I think Netflix is in a great industry. I really like it. I like that the fact that they're number one, and the company is really well operated. They really are ahead of the pack when it comes to their industry. They continue to invest in the business, making it better, making it bigger, making customers even more happy with Netflix. The debt is well below 3 times EBITDA, really looking good. All those things look great, but there's no discount on the stock, which is kind of a bummer, because that's going to cause me to just hold my shares in Netflix and see how their fundamentals change, which might change the valuation of Netflix, or maybe the stock price comes down a bit and it becomes at a good price to buy additional shares. Netflix is one of those companies that actually created the industry that they're in. Streaming, it was really Netflix that really built this business. And now all other media companies are trying to catch up. You see Disney with Disney Plus, Apple with Apple Plus, and Peacock from Comcast, and all the other players are trying to catch up to Netflix. But Netflix is really a pure play streaming company that's really going to focus on the business. I like that a lot about the company. Overall, it's just a great company, and their stock price has really run up. It's not time to buy more shares for me, but I'm going to continue to own these shares and really continue to evaluate the company to see if there's a better entry point in the future. I hope you found the video interesting, and I really appreciate you watching.